Well, there's two kinds of stocks. I mean, the stocks that don't have any possibility of seeing profitability in the next 3 years, and those are still sales. But I think what they've done is created a very attractive opportunity in the companies that are going to have profits and are having a very reduced PE multiple. So, I mean, I think that there's two sets of stocks. There's the stocks that are going to keep going down because they don't have a viable business model. And then there's the companies that are doing quite well, whose multiples have come down that I think are interesting. At the beginning of the day, you always see everything go down, but then they start bifurcating. And once they bifurcate, then you really got a chance to do some buying.
Hey, Jim, I have a question because it came in from someone on Twitter a couple of days ago. You know, we often talk about individual stocks that you like. Are there actually active managers these days? Because a lot of our audience buys mutual funds, buys ETFs and the like. Are there things in that space that you would do?
No. I mean, I think people have, there's the over-indexing is really kind of repulsive. And the ETFs that are created are just created to be able to make money. There's really not anything that I think is really meant to be able to help us. I mean that. I mean, I think that what you're trying to do is find high-quality franchises that are doing very well within the context of a lot of companies not doing well, a lot of companies that have come public that don't seem to have any opportunity to be able to be profitable. So as those go down, it puts a premium on the ones that are very good. And I think it's just good hunting here. I really feel like that we don't want to get in a situation where we hate everything. Because as the COINBASEs come down, that actually makes a real bank look better. I mean, right now, obviously, everything looks bad for today. But I think that that's foolish. We're oversold. There's a lot of companies that are doing the wrong thing. And there's some companies doing the right thing. And they're going to start being rewarded. So I think that
you mentioned Coinbase just now. I'm looking, by the way, Bitcoin has now come in under 30,000. We're living at 29,000 some odd.
That guy Armstrong, he tweets, you know what, look, we're not in danger of going bankruptcy. And I start thinking, well, wait a second, I didn't know you were in danger of going bankruptcy. I mean, there's a lot of very otherworldly stuff happening where you see a lot of stocks that are down big. A lot of them came public during the period of the last 18 months. They had no plans of profitability. And they're trying to pivot. But they can't pivot because they don't have businesses that were meant to be able to make money. They have businesses that were meant to grow revenues, not unlike 2000. And remember, when you got to April of 2000, things switched. You started going for companies like Merck. And I find that's happening every day. I mean, take a look at the end of the day. I know that Lee Koopman said, there are not a lot of stocks that open down that come back up. And I'm hesitant to disagree with Lee, but there are a lot of companies that are real. Like a General Mills that go down and then they come back up. A Clorox goes down and comes back up. Colgate, which didn't have a good quarter, goes down and comes back up. But they're household names. And instead of going after things that are just kind of been obliterated with no reason to own, there's plenty of companies that are doing incredibly well as multiples have been brought down. So I think you have to look. I think that the ETFs are a tremendous distraction. I mean, these things were created by people who want to get rich. And that's fine. I mean, that's the American way. But don't think for a minute that they were trying to help you. Not even for a minute.